Are you sick and tired of writing checks, paying someone else's mortgage because you are stuck in the whirlwind of renting, right? We have helped hundreds of clients navigate the tough road going from renter to homeowner. And today we're going to talk about all the tips and tricks you need to stop paying someone else's mortgage and start paying your own. The rental trap. Look, most people were there. Most people don't go from living in your parents' basement to homeowner, although that's happening a lot more these days. But a lot of people get into rental. It's a way for you to get freedom from your parents, get out and get on your own and start that rental journey, right? But is it the best thing for you long term? Is it the smartest investment? No. Is it the smartest long-term play if you want to build wealth? No. What also happens when you become a renter is you're almost like a prisoner to that landlord, right? You can't do certain things to the property because you don't own it, right? Being a homeowner, you can do whatever you want to the property. You can paint the rooms whatever color you want. You can add a fence. You can tear down a fence. You can do all of those things. And when you're writing that monthly check to that landlord, you could be writing it to your mortgage company, building long-term equity for you and your family, building what is called wealth, right? You build zero wealth as a renter, but you are building someone else's wealth by paying their mortgage for them. One of the other things you're susceptible to is being a renter is increase in rents, right? This can go up based on market. When you get a mortgage, you are locked in at a fixed rate mortgage for over a period of time, typically 30 years. So would you like to have and know exactly what your rent's going to be or your mortgage is going to be next year because you're locked in on a 30-year mortgage? When you renting, they can raise the rent $200 a month next year. And then guess what? You're packing up and moving again to try to find a place that's more affordable when you could be living in a home, building equity for your family. But how do you get there? How do you start this journey? Well, it starts with a few simple steps. You need to start saving money for a down payment, right? You need to put money aside each and every paycheck to start putting money towards your down payment and your closing costs, okay? These are things that sometimes you can get seller assistance in paying some of those closing costs, right? So if you have a great realtor like me, we can help you get those closing costs covered with the right negotiation tactic. But after you set money aside for your closing costs and your down payment, the next thing you need to make sure is you have a good credit score, okay? You need to make sure that your debt to income ratio is in line with being able to get qualified for a mortgage, okay? And what that means is you need to make sure that you're not up to your eyeballs in credit card debt where every bit of your paycheck that's coming in is going to just keep yourself afloat. You need to be in a good financial situation. And a great mortgage lender can talk to you all about the strategies and things you may need to do. If you happen to be a little bit upside down with your current financial situation, there's tips and tactics that they can teach you to help you get in a better financial position to where you can become a home buyer, okay? The other thing you need to think about is what other costs are gonna be there as a homeowner, right? As a renter, if the toilet breaks, all you do is pick up the phone and call the rental management company. Now, if you got a good rental management company, they're gonna send somebody out there to fix it. You got a crappy one, get it? Crappy toilet. So you got a crappy one, you may have to fix the damn thing yourself, right? When you become a homeowner, all of those maintenance items become your responsibility. So you're also gonna have to start sticking some money aside for the rainy days of when you don't know things are gonna break at being a homeowner. Now, I've owned several homes in my life, okay? And ultimately, the maintenance stuff is not as much as you would possibly think, okay? As a homeowner, yeah, you're gonna have your general maintenance, but honestly, it's not all that bad because I'm able to do a lot of this stuff myself, right? YouTube is a great way to go do some of those do-it-yourself projects as a homeowner. One of the greatest client success stories I have is when we were able to help somebody who'd been renting for 4 years in our area become a homeowner. And then the coolest thing happened. Guess what then they became? An investor. Because when they got orders to leave here from our area, they kept that property and held on to it as an investment property, right? So they went from renter to homeowner to investor, all within a very short period of time because they had somebody to help navigate them through the ups and downs of going from renter to homeowner to investor. How does one do that? Well, you have to have some money set aside. Again, as an investor, you're going to be the landlord. Could you imagine going from paying a landlord to receiving a check in 3 short years, right? That's pretty amazing to happen to somebody who is only 27 years old, right? They went from renter, homeowner, to landlord in that shorter period of time. And it was very achievable. It can happen as long as you put a couple things in place and you are diligent about basically not spending a lot of money on toys, right? And being focused on what you really want to accomplish with your life and with your financial investments in the real estate world. So back to the beginning of the journey for this particular client, right? So he's a renter. He came to me and said, hey, I'm thinking about renewing my lease, but what does this homeowner thing look like, right? What is it gonna mean? What do I need to do? So the first thing we did was we got him in touch with a lender, right? So they could talk to him about their financial situation. Luckily, pretty smart kid, didn't have a bunch of debt because he was young, hadn't accumulated a lot in life. So he was in a good position where he could be that first-time homeowner. Now this happened pre-COVID, right? So in that old market that we were in, we were able to get the seller to pay for all of his closing costs, okay? And he was a VA buyer, which means zero money down. So literally, all he had to have was about $1,000 in the bank to pay for his appraisal and pay for his home inspection. And then he could be a homeowner, okay? That's one of the advantages to being a military buyer is that you have the VA loan where you have to put no money down if you're in a good financial position. So that was able to take him from renter to homeowner pretty quickly. Now the cool part about it is when he got orders and decided, he didn't decide, the government decided that he was going to be leaving, right? He had the opportunity to rent that property and he didn't have to sell it. He was going to another location where he still had some VA eligibility left, okay? So he was actually able to buy another home in the next location he went to because he took this property and rented it out. So now he's got somebody else paying his mortgage, just like a few short years ago, he was paying somebody else's. Now, what does that look like long-term for him? He is able to build a portfolio with literally zero money into that property. That's pretty powerful, right? That's pretty powerful to take zero money in and have a rental house that you've got zero money by just sitting there not working for you because you were able to take advantage of that VA loan. Now, one hack that could happen later on is he could refinance that house out of that VA loan, okay? Once he has 20% equity in it, into a conventional loan, and then now he can reuse that VA eligibility again and just keep doing this over and over again. And I've seen plenty of clients do this over the years. I've had military clients that have had 5, 6 rental properties that they accumulated over time just by rinsing and repeating this process, right? It's a great house hack. And you know what? Even if you're not military, You can get into a house at like 3 to 5% down, conventional or FHA, right? And kind of do the same thing. You're just gonna have a little bit of skin in the game, if you will, when it comes to that route. So you have this opportunity, whether conventional, FHA, to put that 3 to 5% down and then upgrade your house in a couple years, right? You know, it's not just for VA buyers to do this house hack, if you will. You can do it with conventional or VA. And the fastest way to build wealth for your family and for your future is through real estate. It's one of the safest long-term investments you can possibly do if you want to grow your net worth. So if you've been caught in the rental trap, it's time to dig your way out of it and become a homeowner. And this again all starts with finding a local realtor who you trust, someone who knows the market, who can put you in touch with a mortgage lender who can lay out the framework that's going to be needed for you to start the journey from going from renter to homeowner, right? They're going to need to look at your financials, make sure that you're financially sound, you can afford the house, and then you reconnect with that realtor and start the home buying process by looking at houses, find the right house, make an offer, get your home inspection, get an appraisal done, get to closing, and now you are building your net worth for your family. If you're interested in learning more about what it's like to be a first-time home buyer, or maybe even buying your 5th rental property, hit the like button, hit the subscribe button, hit the bell, get notified, and drop a comment down below for any topic you would like us to cover in the future, and we will see you on the next one.